So listen, I'm sure you're familiar with this scenario. You have this trade idea that you are looking at and it looks like the golden scenario, and you're just so confident where the market is going to go. You end up leveraging way more than your trading plan tells you to, well, because you're so confident. And as a result, you lose that trade. Although you lose the trade, you don't give up on the setup though, because you are convinced that this setup is going to play out. Now, on many occasions, the setup actually does play out, and you're probably right about that. But on a lot of other occasions, the setup actually doesn't play out, or at least it doesn't play out immediately. And you take loss after loss after loss, compounding your risks higher and higher and higher instead of reducing your risks lower and lower and lower. A lot of traders fall into this pattern. This is something I call rage trading. It's a point at which you just cannot accept the losses that you are taking because you are convinced that this is the move, and even if you're taking some losses right now, once you get it right and the move is ready to take off, you'll make back all your losses and more. The problem with that is when it works out, it's fine. But when it doesn't work out, it's more than not fine, it's catastrophic. It can cause you to lose a significant amount of your account, if not all of your account altogether. So there are a couple of things that you need to know and some things that you need to implement in order to prevent rage trading. So consider these tips. Number one, to prevent rage trading, try to avoid marrying any setup altogether. No matter how good it looks, even when it falls into your A+ setups, do not marry the setup. It falls into your A+ setup, great. You ready to take the trade, you feel like the trade is ready, also great. But when you start taking a loss, you need to start to reduce the risk a little bit and wait for that trade to actually go off. Once that trade goes off, you can start to increase the risk incrementally. You don't want to triple your risk, you don't even want to double your risk. You want to increase that risk size incrementally as the move continues to move in the direction that you expected it to move. Now, I know this may not work for a lot of scalpers because they're usually in and out of the markets, but for those who are intraday, this might be something you want to implement. That once you realize markets are a bit choppy, you want to ease into your position. You don't want to take heavier and heavier and heavier positions, hoping that you found the right moment, and just to find out that moment never comes and you lose most of your account. You want to make sure that you're putting yourself in the best position to succeed, and the best way to do that is to incrementally increase that risk, because you need to be very, very careful that choppy markets don't take you out and then break your psychology altogether by going in your direction after it has taken most of your money. The next thing you want to do to avoid rage trading is to actually implement a certain amount of number of trades that you're going to trade for the day and actually stick to that. Believe it or not, that is put in place to prevent rage trading. That is put in place to prevent you from going and getting your revenge, quote unquote, on the market. There's no such thing as revenge in the market because the market will always win in that game. Revenge is an emotional game, and the market will win every emotional game that you try to play with it. You want to make sure that you limit the amount of exposure you have to the market, even if that means 2 losses and then it goes your direction, so be it. But you know that this particular rule is put in place to prevent you from getting there in that situation, in those circumstances where it's going to cause you to lose most of your account. Finally, the last thing you want to do to prevent rage trading is to start to identify what type of market you're in all the time. You're not always in the same type of markets in July versus in August versus in September, and so on and so forth. The market changes. Sometimes it's choppier than others. Sometimes it's more volatile than others. Sometimes it's slower than others. You need to recognize what type of environment you're in and if you tend to trade consistently profitable in such environment. If you don't, it may actually be a good idea to stay out the market maybe for a week, maybe even 2 weeks, because you need to make sure that you are at the optimal level to succeed. That's a hard thing for a lot of traders. The idea of not trading for even a session is hard for some traders. The idea of not even trading for a day is hard. But until you start to realize that it's not about the amount of times that you trade, it's about the times that you trade that's the right time to trade. When you start to understand that, then you'll start to realize that I actually make way more money much faster by picking and choosing the right moments and making sure that I put myself in the best environment to succeed. That's what this is all about, guys. We want to avoid getting to certain places that don't help us, that don't add to our success in the markets. We want to make sure we stay under control as much as possible so that we can continue to find the consistent success that we desire and that we need in these markets. So I hope you guys gain value in this video, and I really hope you guys can start to really understand if you get to that edge of rage trading, or if you're in the middle of rage trading, remember the tips in this video, start to implement them, and start to watch your profits and your trading become way more consistent. So if you like this video, guys, please like, share, and subscribe. I'd really appreciate it. And until next time, guys, peace.